The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marks with Sean Hackett. Sean Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice stuff to come on and talk about. It's happening in the world of commodities. Sean, how you doing this morning?
Doing really good. I'm getting ready for a trip back to New York for a presentation next week. So I'm looking forward to that.
Sounds like a lot of fun. Speaking of fun, commodity prices here this week have basically just been down. And if you take a look at where corn started at beginning of the week and where it ended at yesterday, I'm a long ways from being a commodity expert, Sean, but it felt like maybe that might have been a bottom. So we went from 430-ish, 431, 432, something like that, down to yesterday. It closed at 401. immediately overnight bounced up a couple cents. I think right now we're trading a penny lower right now. We're at 404, so we're up about 3 cents from where that low hit. What are your thoughts now? Obviously, it's harvest pressure, and there's some other news that's out there that's kind of feeding that. But I guess as you look at this, Shawn, what are your thoughts?
Well, the first thing is we have such dry weather in the Midwest that the harvest is going at a record pace.
Right.
Just means we have more corn and soybeans and sell than we would normally have at this moment in time. And there's always farmers that have to sell. So that on the margin, is not unusual that you have some harvest pressure. In this case, it's just extreme. It's just an extreme situation because normally a lot of the corn that you could sell today because you already harvested it won't be harvested for another 2 or 3 weeks. Doesn't change the fundamentals, just changes the timing of sales. Secondly, we have this mass confusion over what China's really doing with their fiscal monetary policy. A few weeks back, they said they're all in. They're going to print a bunch of money. They're going to hand money out to consumers. Commodities took off. Everybody got excited. And then there was a follow-up meeting the week after, and they didn't really say a whole lot. And the market got nervous, pulled back. And really overall commodities have been under tremendous pressure really ever since that confusion.
Mm-hmm.
Thirdly, we have our first rains of the growing season in Brazil. This is really, really a factor for soybeans more than it is for corn because the first crop corn is really pretty small. This is really more of an issue for soybeans and things like coffee and sugar and those kind of things. But they're getting some rains. And we warned about this many weeks ago that we were expecting mid-late October rains. We're getting those rains. The $1 trillion question is this a pattern change? Is this going to allow them to catch up on planting? Because right now, as of this last week, this was the slowest planting pace they've had since 1971. So they got a lot of catching up to do. Our view is that obviously any rains is always going to be helpful. They will be able to get some planting done. They will be able to accelerate that planting. But I don't believe this is a massive pattern change. I do think that after we get out of the month of October, we're going to get back to a warmer, drier pattern. And I still believe that when we get to that point, we're still going to be, probably the top 3 slowest planting seasons, since 1971. So obviously soybeans have corrected because of the rains. Obviously that's an impact, but I think they could quickly put that weather premium back on when we realize that they're really not going to catch up. And that if they are going to actually catch up, they're just going to have to plant a majority of the crop very, 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 very late because the rainy season in Brazil, the first uptick is in September. Peak moisture is in December, January, and every month it goes up. So right now, November, December, you're moving into peak moisture. So they will be getting some more rains. They will be able to get some planting done. But the problem is, the later you get the crop planted, the less acres they're going to be willing to plant, and the more yields will be compromised, and the more it will impact second crop corn timing of planting in those acres. We saw that last year, and we had a 15% reduction in corn production. So the corn catalyst is going to be when we get near the end of the year into January, and we really see how late this corn crop's going to be in terms of planting and how many acres we're going to lose and that sort of thing. So overall, yeah, I think this is a correction. I think we're close to a low, a secondary low, a higher low. I still believe August was the actual harvest low. And we're just making a higher secondary low here. And, we get into late this week, early next week. We're going to start to look at those forecasts moving out into November. And I do believe we're going to be seeing a warmer, drier pattern reemerge, at least for the soybean areas. And that should reignite weather premium back in. And corn right now is just following either soybeans or corn up or down because corn doesn't really have, at the moment, a weather catalyst.
All right. So let's same difference here. Let's talk a little bit about the Russia-Ukraine. Russia got some in the Volga region of Russia. There, they got some rains there in some key wheat growing areas. Still very dry. You look at what's going on in Europe. France as keeps ratcheting back their wheat production estimates. So I guess as you're looking at wheat, what are your thoughts there, Shawn?
It's very, 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 very late to have rains do too much benefit to the Russia-Ukraine situation. It's never bad. It always can help a little bit, but if they had these kind of rains, Casey, let's say 3 weeks ago, it could have been a game changer. But mid-October, they can add they can catch up a little bit here, but in my view, the damage has been done. The amount of acres that can get planted is limited, and the condition of the crop going into dormancy, it can improve a little bit. But I don't, once again, like Brazil, don't really see this being anything more than a transient weather pattern that's going to go back to a drier pattern thereafter. So yes, rains always help. They did take some weather premium off for wheat, but I think it's limited how much more that's going to have an impact with current wheat prices being as cheap as they are. The next thing I'm looking for, given that Ukraine had such a bad crop last year, and they're going to have at least a similar bad crop this year, if not worse, is when Russia's going to pull back on their export quotas. And once they do that, or once they make an indication that they're going to start holding wheat back to keep themselves in a better supply demand situation, that's really, I think, when the wheat market's going to get the fundamental signal to go substantially higher. My best guess is we probably hear something from them on reduction of export quotas sometime over the next 30 to 45 days. That'd be my expectation.
Okay. All right. Spend a little time talking about what there've been lots of articles out, and I've read, I don't know, I probably read 5 of them yesterday, and there's 5 more in my inbox now. But there's, talking about possible trade wars with China if Trump becomes president again. What's that look like? How's that play out? So on and so forth. Obviously, it's a market mover because you only can go off of the past actions and as well as what's being said on the campaign trail. But I guess, Shawn, as you look at this situation with a possible Chinese stimulus coming, whatever that looks like you talked about earlier, and then you throw this into the mix, I guess, what are your thoughts on this? What's your feeling here?
I mean, I think we know that Trump's going to, create go back to a tariff-led policy like we had before. The problem or the issue is that he doesn't get to be president right away, right? I mean,
right.
I forget the exact date that they take office, but I think there's a couple of months between the election and when he actually takes office. My thought would be, or my thinking process is, that this could be short-term, a sell the rumor, buy the news, because if he gets elected, he can't impose his policies for at least a few months. And even when he becomes president, it's going to take a little time for him to do it. I could actually see a huge surge in commodities because if I'm a buyer of corn, or I'm a buyer of soybeans, or I'm a buyer of cotton, I'm a buyer of natural gas, and I now know he's going to be president, and I now know he's going to come after us with higher tariffs, then I want to buy as much as I possibly can before those policies get put in place while they're getting us still good. So in kind of a interesting twist, we could actually see a spike trade higher in commodities on a mad dash to try to buy commodities from us before the tariffs war starts to develop. And so that could be an interesting opportunity for producers to be able to sell possibly. So, it's these kind of things. I mean, there's always the long-term picture of what it means, and there's a short-term picture of what it means. Long-term, it's obviously not good news for the demand for commodities if you're going to rupture the free trading system. At the same time, there could be a really mad dash to buy things ahead of that, that reality. And so could be a wild spike trade that might surprise a lot of people, Casey, because everyone's expecting that to be bearish commodities and bearish grains. It could be that we get a significant spike trade, the month after that no one's expecting, and that could be where everyone needs to be sharpening their pencils about, making cash sales, getting things taken care of before we roll over and he becomes president. That's assuming he's the president. If it's Kamala, it's more of what we have. It's going to be more, raising taxes, handing money out to people, spending money. What we've been seeing is just going to be more of the same, which is more favorable for commodities. So, but it wouldn't cause a short-term spike trade either, right? It would be more of the same. So I kind of feel that if you're in the commodity economy, if you're just thinking selfishly, just about you, not about what's right, what's wrong, the country, you really want Kamala to get in and stay in, because that, in my view, is the better longer-term tailwind for higher commodity prices. That's my feeling. You really wouldn't want a 4-year trade war and tariff war, the likes that we had before. Yes, the government maybe will hand a bunch of money out again, like they did before. I think something like 80% of the farmer income over those 2 years were from government payments. Can they pull it off again with the deficit as high as it is? I don't know. Maybe they can, maybe they can't. But certainly, if I'm someone that grows corn very, very selfishly, I'm probably gonna be looking at a much lower corn price from a Trump administration than I would from a Kamala administration. That's just from their economic policies. Obviously, weather and there's other factors that can determine what prices do. But obviously, my feeling is that if he gets in, get ready to sell a spike trade. If he doesn't get in, then I just think you're gonna, then the longer term picture looks pretty darn good for agriculture. Maybe not for the country, maybe not for the economy, maybe not for the debt. I mean, I'm not. This is strictly for U.S. agriculture. I think if Kamala gets in, we have huge tailwinds at our back. If Trump gets in, it doesn't mean it's all negative, but we have some severe headwinds that we're going to have to deal with that we wouldn't have to deal with under a Kamala administration. The other factor, and this is just specifically talking about commodities, not what's right or wrong or indifferent. I do believe Trump would be much more willing and able to reduce geopolitical chaos to some extent. I think he could de-escalate the wars. At least he's indicated he wants to de-escalate the wars. And I think he would be more open to cutting a deal on Russia, Ukraine, and making instead of what appears to be happening now, where we keep pushing, pushing and pushing and pushing and pushing, we keep pressing and pressing. I do believe he would be wanting to de-escalate. Now, whether he's successful or not, I don't know, but I think there's a greater chance for a de-escalation of geopolitics under Trump than it would be under a Kamala administration. That would be bearish for commodities, because commodities do tend to catch, generally speaking, a tailwind from geopolitical uncertainty because of all the risks to supply shocks, trade flow shocks, that we can see. So, once again, just looking at it from strictly commodities and agriculture commodities, and if you're strictly voting on what you want for yourself in your industry, then you want Kamala to win. And if that does not happen, then you just need to be very proactive at taking advantage of some of the volatility that's going to be coming under the Trump administration. Remember, he's the guy that tweets at 4 a.m. and moves markets up or down, limit up and limit down. I know this happened regularly during his administration. That will happen again if he gets in. And you have to just be very, very, very active and nimble under his volatile, what would be another volatile administration. It doesn't mean you wouldn't get selling opportunities. It just means that you have to be very, very fast and quick and keep an open mind. Where I think under Kamala, you'd be maybe a little, you'd be a little bit, you can look at it a little more longer term in nature. So we'll find out in a few weeks what happens, and understand this possibility. It's possible that we may not actually know who wins the election after the election.
Oh, yeah. It's going to be.
It could very well be that we may be in a period of uncertainty because the vote is so close. In a couple of the key states, 100,000 votes one way or the other. They're going to go recount. They're going to go sue each other. I mean, we may not have an answer on this right away. I mean, everyone thinks we're going to have, Wednesday morning, we're going to have we may actually remain in a state of uncertainty over who's actually going to get in and how long it's going to take to get in. I think the certification, I'm trying to remember, the certification is like late December or early January. So
yeah, the first week of January is when they certify, and then it's like 28th or 7th or something like that of January when they actually get into office.
So that period from November through, I can't imagine that this election is going to be clear cut. I don't think it's going to be clear cut. I think it's going to be just like the last two elections, razor thin. Everybody accusing everybody of rigging this and rigging that, and these people voted they shouldn't have, and this machine didn't work right, and I'm not trying to. I'm just saying that's.
No, you're right. Exactly what it's going to be.
I really don't think we're going to get closure on this on the elections day. I just think it's going to be too close, and so it'll all be about how the market perceives who's likely to win in a battle. Generally speaking, the one who has the lead on Wednesday morning tends to ultimately be the victor. If you remember when Bush Jr., I think he won Florida by, was it 500 votes or 800 votes or something like that? And
hanging chads. Had all those hanging chads out there.
But he was the victor on the day after, and it went through this whole process, and he still was the victor. It's very, very hard historically in any election that is somewhat free to override the results the day after. I'm not saying it's impossible, but what I'm saying is that even if there's great uncertainty, whoever technically shows is the victor on Wednesday morning probably ultimately will be the victor. And so I would go with that correlation, despite what might be chaos for a month or two afterwards.
Yep. There's something I've been thinking about. Highly contested election like this, I don't know if we've had one of this magnitude where it's this polarizing, but if you think back to like when Carter and Reagan, when that time frame in 1980, go in, you start looking at some other example for like Gore Bush. That was another highly contested race, and where we're at now. As you looked at those markets during those time frames, what happened after the dust had settled and everyone knew what the next 4 years was going to look like? How did the markets respond in that next week or two around those time frames? So did you notice, hey man, this is what we expect to see happen, so now we're kind of status quo, or now we've got to take a breath of air and markets kind of went up for a minute? I mean, what's been the normal reaction you've seen to this kind of stuff, Shawn?
Usually, a new election always breeds fresh optimism that things are going to get better. Doesn't mean they're going to get better. They almost never do get better. But, people always are optimistic. Well, we have, a fresh slate, new policies. Congress, everyone's promising they're going to do better. And so there does tend to be a relief rally when it's certain who's going to get in, and that optimism for the future. Then people start looking at the actual policy and what politicians say to get elected and what they actually do can be very, very different. Meaning they say whatever they have to say to get in, and then their true colors come out about what they really plan on doing. Because if they told you what they really planned on doing, they never would have been elected in the first place. I mean, that's politics. It's not Republicans, it's not Democrats, it's not independents. It's just the way politicians are.
Yep.
So there's a euphoria. All right, there's a new president. Better things are coming. We have a new lot in life. And then the gavel comes down on what's actually going to happen. And you start looking at, and remember, the very first year and a half is when all the bad stuff gets done. When all the draconian things get done, when all the difficult things, the most extreme things attempted to get done in that first year and a half. So that's when, whatever can get through gets done. And some of the more damaging at times policies of our historical past have been done in that first year and a half. And so that does tend to breed concern, fear, and the markets then can have a negative, a very negative reaction after the euphoria blows over. That's generally speaking what you would see is an initial relief rally followed by, what are they going to do now? Oh, that doesn't look good. That sort of thing. That's typically what has happened. Typically.
Yeah. Okay. A lot of stuff to pay attention to, Shawn, and it's rapidly coming to the end here, and it's going to have another whole set of whiplash and things to think about too. So,
well, the last thing I will say is that whatever does happen, the markets will adjust. But once they're comfortable with the rules of engagement, no matter how ugly those rules of engagements are, once they know what the rules are, then they can play the chess game again, right?
Right.
Just when you don't know, like right now, how are you supposed to play the chess match? How? Because you don't know. But it doesn't matter how bad. Once you know, okay, all right, here are the rules. Here's the situation. Here's how I'm going to manage it. And so to me, it's the most important thing is to get the market's correction phase out of the way, where it adjusts to the new reality, and then we can move forward with markets being quasi-normal again. But that process from going where we are, which is this massive period of uncertainty, to a new realm of certainty, can be extremely volatile and chaotic. If you remember how chaotic it was when Trump first got elected, wild market swings and gyrations that we had during that time. And the same thing when Biden won, wild market gyrations, because the market was assessing the new rules of engagement. I would say under Trump, at least we have a better idea of exactly what to expect. Whereas when he first got in, we weren't really sure. I think at least that might make the market a little less volatile within the realm of volatility, because at least he's a known entity within an extremely volatile administration. But that doesn't mean that we're going to have calm markets. It just means that at least we have a known quantity with him that we didn't have before. That's all. Yeah,
for sure. Okay. All right, Shawn, good stuff as usual. Folks want to reach out to you, get more information about what you're doing at Hackett Finance. What's the best way to do that?
Our website is Hackett, Hackett, advisors with an S.com. Twitter page at Faradix11. Sometimes we put out information and interviews on our cycle statistics and correlations of how we look at the future of ag prices to see if what we do might be of value to those that listen and watch your show on a regular basis.
Right on. Shawn, appreciate you being the podcast. Maybe we'll catch you again next week.
Sounds good, Casey. Thanks.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram, Moving Iron LLC. Go to LinkedIn and Moving Iron Podcast. See the video version of this over at the YouTube channel, which is cleverly named the Moving Iron Podcast YouTube channel. Check it out there. Go to TikTok. I guess we're done worrying about that, so check out TikTok and see what's going on there. And you can always find what's happening in the world of Moving Iron at movingironllc.com. So with that, I'm Casey Seymour with Sean Hackett. Let's go move some iron, folks. Out.
Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.